What's up, everyone? Welcome to our July 22nd edition of This Week in Crypto. We are going to go over what has been a very nice continued rebound here over the past week. Here in July, it's certainly been a nice treat to see many market caps begin to recover for the vast majority of you who are bullish on crypto right now. Certainly, there are going to be some red flags that we go over today, as well as plenty of information that will be useful for which bottoms you might want to buy next, when to begin profit taking, that kind of thing. We also have a new Sandsheets model that I'll be debuting soon, and I'm going to give you guys a little preview of that today to show you how it works. And it should be very useful and a nice bonus factor for your trading strategies that you can add to your arsenal here on Santiment, especially if you're a pro member and have full access to everything. But for starters, as always, I'd love to mention to everyone that what we go over on this call is not to be considered investment advice. We are simply going over our data to give you an idea of where these divergences are showing up and what typically has happened in previous instances when we've seen similar setups to right now. And with that out of the way, why don't we dive into a few of the big highlights over the past week, beginning with, of course, Bitcoin and Ethereum. Bitcoin has now surged over 23.5K. We'll skip just briefly ahead so I can show you the last time we were here. We did briefly go over that mark just a couple days ago before dropping below. But really, the last time we were here was about 5 to 6 weeks ago in mid-June. So after a very long drop and what many people consider to be a famous setup, a triple bottom, where each bottom was rising from the last bottom, we've now surged back up to 23.5, and it's still a long way to go, right? I mean, We look at just 2 months ago, and we'd be very uh, sad if we were flashing back to May 22nd and heard that the price was only 23.5K, but everything is relative, as we know. And when we actually got into the 17Ks briefly, uh, about a month ago, we're now thrilled to be where we are at 23.5K, with still a long way to go to get back to where we were in November. If we went all the way back to that month, we can see here that we were well above 68K. So, we have we're almost just above a third of the price and market cap that we were back in November. And we can also see, I'll go over this in just a moment. I want to jump back to the screener, but we'll be going over the correlation between Bitcoin, the S&P 500, and gold in just a moment. So other than Bitcoin, we can, of course, look at Ethereum, which has had a really stellar past 30 days or so. If we zoom out here, Ethereum is up almost 50% now, at plus 48% over the past 30 days. You can also see Matic has more than doubled. Quant is getting close to doubling. Curve has more than doubled. These are just a few highlights. Ethereum Classic, of course, has made up most of its gains just in the past week here. So we can look at a plus 73% just in the past 7 days. Very impressive for Ethereum Classic. BitTorrent as well has had a really nice run just recently. ApeCoin, for you NFT fans out there, it's been on quite a run. But yeah, I mean, looking at this chart here, not a lot of red going on. You can see, even the few reds we see are mostly just stable coins that fluctuate at anywhere between negative 0.03 to positive 0.3 during most occasions. Luna's actually dropped a bit, and again, Sokishi Metaverse has dropped just a bit. But for the vast majority of these assets here in the top 100, you're likely pretty happy with your portfolios if you've stuck through it through this long crypto winter, as they say, especially in the first half of 2022. We can also notice that the social volume of many of these assets are not really reflective of a big surge in crypto. So even though prices are rising, we're not getting a lot of discussion related to Bitcoin. Most of the discussion was actually happening last week, and Ethereum was having a huge surge in discussion last week, and it's come back down to earth in a big way. And we do see that a lot of altcoins here, on the other hand, did start to see some pretty big pickups in discussion. So bittersweet that there is an uptick in discussion toward a lot of these second half of the top 100 assets, but with the top coins not getting a lot of attention, it means that people are getting a little bit altcoin heavy and having some FOMO toward the more risky assets, sort of like we saw when things were beginning to top around the all-time high in October and November of 2021. And we don't want to see that ideally when things are rising. We'd rather have everyone focused on staying with Bitcoin and Ethereum, which both had their respective runs over this past week where they were dominant over altcoins, which is interesting. So it does appear that some more momentum is coming into crypto right now. Overall, the discussion rates are up slightly, but the top two assets, not so much. If we go to the past 30 days, we see that it's more so about dead even. So here in July, it's about almost exactly where it was in June in terms of discussion rate. Ethereum just slightly down, and you can see the vast majority of these assets are down, even though the prices on almost all of these assets are up compared to a month ago. So that's very interesting to see. By the way, Maxim is not here. Is he, Max? He may jump in at some point, but I'll expect it. Okay, I'll just go over as much as I can, and if he jumps in, he jumps in. So we also can look at the top 10 trending words right now to see exactly what has been the focus among the crypto community. And quite clearly, the big story has been insider trading that's been going on Coinbase, particularly one individual I won't name the name on the stream, but he was caught basically doing what a lot of people always feared that exchanges were doing, and getting information related to assets that were going to be listed a few days in advance, and then telling his family members that they should invest in the assets, and they would accumulate a whole bunch right before the big announcement. Everybody would react to those assets and start to accumulate themselves, and then the family members would dump at the top. You'd expect this to be, tens of millions or something, but I guess the total profit they had was about 1.5 million. And then the guy was attempting to flee the country, to my understanding, and he got caught at the airport, which is something straight out of a movie. So that's been getting a lot of traction and dominating the discussions over the past week, or I should just say the last few days, that is. There's also still discussions about the SEC, some airdrops going on. Tesla always has a bit of overlap with crypto, so that's been in the news. And don't forget, guys, you can always check out app.santiment.net/dashboards/labs/trends and see exactly what's going on and what the hot topics are in crypto at any time, and be one of the first to really see when it's time to react to a major story and how that's affecting upcoming prices. You can also, of course, look at something like the word short, which has been in the news recently. And what this will do is give you a glimpse of what the frequency of short or any other word is on the platforms that we scrape our data on Reddit, Twitter, Discord, Telegram, and some other pro traders chats. And you can see quite clearly there was one huge spike that occurred about 5 days ago, so toward the beginning of this past week. Let me zoom in. Actually, yeah, I can zoom in a tiny bit here. So right here, look at how the price was just starting to decline. This was just under 21K, so it went above 21K and then fell below it. And suddenly there were a ton of people talking about shorting for reasons related to the economy, which I promise we'll look at next, that correlation between Bitcoin, Ethereum, and the rest of equities out there. But because of the economy being so concerning right now with inflation and another FOMC meeting coming up next week, many people, I heard on 4chan, Reddit, many other platforms, they were starting to really discuss the prospect of shorting after we had a kind of a short-term rise here, and it looked like that local bottom had hit. There was some recovery, and people said this was the time to short. And as we have very often seen and touted on these calls, the crowd, especially when they start to unanimously believe that the price is going to go one way, they generally get it wrong and it goes the other way. And this was a perfect case of the crowd deciding it was time to short, and then all of a sudden they get liquidated and we see a big run. And it was something like, I believe at its peak, a little over 20% of a rise since this big spike in just about 3 days, which is pretty impressive. We've seen previous instances too, just on more minor levels, like this spike here. We saw a big increase in discussion towards shorting, and the price took off. This one was kind of very short term, where people were talking about shorting after a big drop here, and then suddenly we got a nice, very short term relief bounce until people stopped talking about shorting. This one, it was sort of so-so. People talked about shorting, and it immediately went up instead of down. So pretty much every instance, there was at least some sort of uptick right after there was discussion about shorting. So that just gives you a glimpse at how you want to avoid getting into the traps that the crowd is talking about. Even going back to Black Thursday, almost 2.5 years ago, everyone decided on that initial drop that was kind of the beginning of the end of crypto, or at least it was going to be a very long bear market throughout the time that COVID is going on. And look where we are now. COVID is still going on. We had an all-time high in November. Of course, things retraced big time, but the price is still way above where it was after that Black Thursday. I believe before the drop on Black Thursday, prices were at 10K. So Bitcoin is more than double that, despite us being in a pandemic. So that tells you that the crowd very often gets it wrong. The Ukraine and Russia war that was announced back in February, everyone thought that was going to result in a huge dip. That ended up not being the case. We see so many times where people get overly bearish or overly bullish, and then the opposite comes to fruition. And so this is a very clear example of how you can really stay on top of what the crowd is saying and, kind of be a counter trader to that oftentimes and be successful doing so. Mind you that the gold line here is social dominance. So this is the percentage of discussions over time. And the blue lines are the overall mentions over time, regardless of percentage and whether or not there's a big influx of traffic in discussions overall. So you can see even here, like this one didn't have a big social dominance spike. It was a very tiny one, but the social volume was up. Everyone was talking about shorting here too. And boom, this was a second wave of a bounce right after the crowd decided it was time to short. You can also, of course, check out here and see that that social volume was mostly related to Reddit out of the three platforms. And then this one here with the big social dominance spike, this one was related to Twitter. So that can give you a little extra insight in case you want to get granular and look at which platform is causing these ebbs and flows. And as I said, you can also look at the overall social volume. If you just type in an asterisk into the search bar here on our social context page, give it just a few seconds to load. I'll take off social dominance because that doesn't matter. We're now looking at the overall volume of everything on crypto social platforms over time. And you see kind of a natural up and down fluctuation over the past month. But if I go to the last year, this will paint a very interesting picture. So the peak happened here in late April, and you can see that over time, social volume has just been declining and declining. So even though, over the past month, it's kind of looked pretty flat, if you zoom out here, you can clearly see that there's really not much response to this short-term rise thus far, going from the 17Ks up to the high 23Ks. And until that changes, we'd consider this probably a good thing. Usually the big rises in social volume are lagging to the price. And when you see a huge spike, it usually means the mainstream is trying to jump in on a big rise, or they're jumping in and trying to buy the dip. Either way, I think that prices generally look best when the overall social volume is declining, and then you see a nice relief like this until the social volume picks up again. This is, of course, just one of many ways to look at things on the social end, and we'll get into more here in a moment. But I wanted to make sure to point out, since we haven't done so in a while, that you have the option to look at just all social volume rather than just specific terms. And that can be really helpful for your trading. All right, let's check out the viewership and see if there are any questions early on. Okay, no worries. Thanks for jumping in and joining us on the chat, Maxim. He says hi, friends and degens. Okay, so why don't we look at the correlation as promised and see what's going on between Bitcoin and the S&P 500 over the past week here. So we can see, going back to just about a month ago, the S&P bottomed out and really started a rebound hard thereafter. Bitcoin, on the other hand, went through its share of attempting to rebound by following the S&P, then falling a lot more, attempting to rebound again, falling back, and now is up again. And the S&P did this a tiny bit, but it's fair to say that the S&P has actually, relatively speaking, performed a bit better, not percentage-wise. Bitcoin has performed better percentage-wise over the past month, but based on its usual range of rising and falling, the jump in the S&P has been a little more impressive in terms of its correlation to Bitcoin. Meanwhile, gold has just plummeted, which is interesting because normally you would see something like inflation concerns and CPI negative reports coming out favoring something like precious metals, and that's what's happened over the past century plus in these kind of conditions. But it's a different world out there, and there's no guarantee that that's what's going to happen for gold. And many people refer candidly to Bitcoin as digital gold these days. So there's some credence to remembering that as well. Regardless, I'd still call this a fairly tight correlation between Bitcoin and the S&P. I mean, we look at the past the past year, I should say, and for the most part, especially since the beginning of the year, right around here in late January, if I zoom in to the last 6 months instead, you can see that things have stayed pretty darn tight throughout the year thus far. And like I said, a little bit of separation going on the S&P, and that's not a bad thing. If there is to continue to be a tight correlation throughout the rest of the year, then that would actually imply that Bitcoin has a little bit of catching up to do, and that would mean some big percentage gains versus maybe some flat or small gains from the S&P 500 if the S&P 500 is able to continue through the big FOMC decision that's coming up at the end of the month. If they decide that it's time to tick up the interest rates a little bit more after already doing so 3 times this year, then we could very well see a little bit of a drop off, because that's with every one of those negative reports, we've seen plummets in the price of both the S&P 500 and Bitcoin. And ideally, we don't want to see interest rates rise if you're bullish in equities, because low interest rates gives companies a greater ability to thrive and rise their respective values, share prices, I should say. So Bitcoin, if it stays tight, will benefit off of the decision to not raise interest rates. I'm not quite sure what the speculation is yet. Many people think it's going to continue to happen after hearing the latest report of a 9.2% inflation at the beginning of this month, I believe. So we'll have to wait and see. And I think this next week, at least in the short term, it's going to be very choppy as people try to guess and figure out what's going to happen. So that's a little on the correlation. Why don't we start to jump into some Bitcoin metrics? So for circulation, it's been an interesting up and down pattern basically for the last 3 months or so. We look at the last year and we see that overall there's still a nice rise going on. But if you look at the 30-day moving average, there has been a bit of a concerning drop off, and it's fallen back to basically where it was in mid-January. So not quite as many unique tokens moving as we saw during the really polarizing drop-offs in May and in June. But nevertheless, it's still nice to see that the overall trend over the past year, if we draw a little line here, it's a slight rise going on. And we have to be happy that despite prices being lower, circulation is higher, right? That's ideally a very, at least a slight bullish divergence there going on. And to fact check that, we have this NVT Sandsheets model, which you guys can freely make a copy of and plug in your API, and you'll be able to see this on a day-to-day basis, just as we are, as long as you have your Sandbase Pro API in there. We can see that things were semi-bullish throughout the end of 2021 and up to this month here in 2022. That said, we're 3 weeks in now in July, and we're still seeing a neutral signal after being bullish the past 2 months. And obviously with the bullish divergence, it looks like it correctly played out after a month of dipping further and staying bullish. We've now seen a rebound. So it would be great if this could end up turning green or yellow-green by the end of the month. Even if it's neutral, it's not the end of the world. I will warn that when we see like a neutral signal after like a long stretch of red or a long stretch of green, it could be the sign of a turning point where circulation starts to drop and goes back into red. But that certainly doesn't always end up being the case. I mean, this would be a good example where we saw some fluctuations between semi-bearishness and neutral, and then things started to pick up here once it got into green. This is an example of it going into red. We had a pivot point here. It began to turn green here in March 2020. Of course, this was COVID, so take this with a grain of salt. And then we had a huge rocket launch until we turned red, and then all of a sudden it goes back down. So this NVT chart is pretty reliable on a long-term time frame, and I recommend checking in on it from time to time to see how things are looking. Heading back to the main Bitcoin metrics, we see that the daily active addresses has continued to decline. And this is going to be a bigger concern than circulation, because we're now, according to this 30-day moving average for active addresses, we're now down to the lowest average amount of daily active addresses since late August, where we're getting about 861,000 unique addresses moving on the network on a day-to-day basis. We peaked right around the all-time high with about 980,000 daily active addresses. So it's a pretty sizable drop in the amount of unique participants right now in Bitcoin. Not necessarily the end of the world, because remember, circulation is going up, but with circulation, according to our NVT model, looking neutral, and daily active addresses probably looking semi-bearish here, you know, it's not the ideal setup in terms of utility and how crypto will be able to advance from here until things start to pick up. You know, if we start seeing a pretty sizable rise again, like we saw here, and the average starts to get close to about 1 million, which is of course an arbitrary number, but when we see 1 million or more, that's generally a pretty good sign for Bitcoin. That's when you'll start to see prices really rise with confidence. Looking at MVRV, the 30-day is showing that we are in the slightly overbought area right now. If I marked 15% right there, the pink line is staying below it, but not by a whole lot. Ideally, you know, we'd still want to see the MVRV below 0%, as we did when the bottom was forming about a month ago. And because we've had such a nice rise, and almost, I shouldn't say almost all, but the vast majority of crypto traders are up money compared to a month ago, that's how the 30-day MVRV was able to really shoot up the charts and be here at about 9.3% after dropping down to below negative 20% just a month ago. So what a difference a month can make. If we start to really get close to this one, you know, strong word of caution to be careful about being too heavily leveraged into Bitcoin. That is where corrections often occur. At the same time, if we see things start to drop down to somewhere around here, that's when you are in a pretty low risk area where you typically see bottoms here, 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 and here. Actually, that one wasn't even below, but it still ended up being a very good bottom. You can see anything below 0%, that means there's just less risk than average. All right, so that's 30-day. I'm going to remove 30-day now so we can look at only the 365-day. I'm going to zoom out here. We'll look at the last 7 years, going back to 2015. So when, just like with the 30-day or any other time range for MVRV, when you see things up super high compared to previous instances, those are the times where you see corrections. Like we saw the all-time high for Bitcoin's 365-day MVRV was at about plus 154%. We saw a quick correction there back in January of 2018, and things stayed low, getting all the way to negative 53%, and that was around the bottom. Quickly jumped back up here. Everyone started to celebrate, thinking we were going to quickly get back to the December 2017 then all-time high. But because MVRV got so high, this was a nice hint that it was time to correct, with the average trading returns for 365 days being over 100%. Generally, you got to be a little careful there. So it retraced, got back down to negative 37%. That was the bottom. And then, boom, we see another huge 365-day MVRV at over 100% again. It did manage to climb for another month and a half or so, even though the MVRV was starting to decline. And then we saw the big drop off, because anything over 0% is higher risk than average. That's what we have to remember. Briefly went into negative territory. That's where we saw the bounce. Back into positive territory here in October and November. Then we saw the big plummet, which we haven't recovered from since. That said, where are we now? We are still in a very negative territory historically compared to the last 7 years. Negative 35% is, the second or third lowest we've been over this time frame. And when that's the case, it certainly means that we're in a lower risk area than average on this particular time frame. So you may be asking, what is the most handy time frame to look at for your trading, just to know if prices are going to go up soon or down soon? Obviously, it's a very complicated question, but we have this MVRV divergence model, which will show all time frames together and how close we are to the historical tops or bottoms of those MVRV ranges. So we have both the 30 and 365-day MVRV included, along with 4 other time ranges. And it's going to do a refresh, but before it did, you guys likely saw that the majority of them now, after this rise in July, are sitting in red and orange range, meaning they're a little bit concerning and potentially overbought right now because of the short-term ranges, the 1, 7, and 30-day MVRVs in particular, really starting to surge, and many average trading returns are well into profit territory. We don't want to see that. We want to see short-term, mid-term, and long-term timeframes in loss territory, so that we can safely feel like it's a good dip buy opportunity time, and then cash in on that. In the end, crypto is a zero-sum game where you want to ensure you are buying when others are in pain, taking profit when others are celebrating and talking about Lambos and going to the moon, right? So that's where we're at with that. I won't wait for this whole thing to refresh. I can just let you know that the majority of these assets are showing semi-overbought or overbought signals at the moment. Another thing we can look at would be the funding rate while we're here on the Sandsheets model side. And we see that the Bitcoin funding rate has fluctuated the past couple days quite a bit, got into greed territory here on the 21st. Notice how prices topped here and then dropped down. The funding rate got a little more close to neutral, and then it started to rise while funding rates began to fall back to even closer to neutral, pretty much getting to neutral here just about 10 hours ago. And since that time, the price has risen and longs are not rising like they were yesterday and the day before. So with Bitcoin funding rates sitting at about neutral right now, and altcoins, this is taking all of the altcoin funding rates together and blending them to see whether people are shorting or longing more. They're shorting just a little bit more than longing at the moment. And that's a good thing. So people aren't believing that this altcoin rally can continue at the pace that it's been at. And this is a better setup than average, with Bitcoin at neutral and altcoins at slightly bullish because people are bearish, if that makes sense. That means that there isn't much risk of long liquidations where the price gets sent down and gets rocket fuel on the reverse side, where it can send the price down more than it needs to because of all the longs going on. as long as it stays fairly neutral, or people betting against crypto, we could have some room to run without too much concern on the funding rate end. We can also look at specific assets to see if there's anything that's getting particularly shorted. And there are a few like Tron, Small Love Potion, Ren, Bancor, and Axie Infinity. So these are a few where people are putting extra money down to with the expectation that the price is going to drop. And of course, that means that there is an increased chance that prices can rise. As far as anything excessively long, we don't see anything here in the red territory right now. We saw that a few did earlier in the week. Solana was seeing some excessive longs, Small Love Potion as well. Ren, it's interesting to see that these just have wide ranges on both end. V-Chain, Dent, quite a few of them. Helium, Audius, I won't go through all, but right now it looks like most are either in neutral territory or slightly short, which is why when we look at this purple line, you see a slight favoring toward the green end here where people are shorting. Green is good for bulls. It means that all of those shorters are just creating rocket fuel for a rise to go up even higher than it would otherwise. All right, let's head back to the Bitcoin charts. We'll go through a few more, and when I get to mean age, I'll show off the new Sandsheets model here. Age consumed has been fairly neutral over the past, well, I'm going to zoom in actually, because we're way zoomed out. So we did have a spike correction on that just a couple days ago. This was a signal that there were some major dormant tokens moving. And it was likely coins that were sitting for quite a while, with this being the second biggest spike, or I should say third biggest spike over the past 3 months. Generally, when we see bunches of age-consumed spikes, that's a very good sign that there's going to be a price turnaround. This was technically just a bit of a turnaround here on the 17th of June, where things were starting to rebound, huge age-consumed spike, and then it gets sent down. Generally, whatever direction the price is moving at the time you see the spike, there's an increased likelihood of prices now moving the opposite direction. If we go back historically, let's go 7 years again. We can see, there was a huge dormant token movement here on November 28th, 2018. Prices were dropping at the time, and that basically signaled the bottom. Here we saw some major dormant tokens moving, and this actually did not signal a bottom. It simply signaled that there was going to be some volatility, and it actually ended up helping prices move up quicker. Any other spikes that might be notable? This one here was a very good signal that we would see a price direction shift in late January. But remember that these aren't always going to be the case. They generally are most powerful when they happen in bunches. So like this one, even though they weren't that tall of spikes, there were a lot of bunches of dormant token movement all at once, and that led to at least a temporary correction here until age consumed dropped. So we did see a minor one here. I'd say that's a good sign, about a week ago, because it happened right at the bottom. So technically it did signal a price direction shift, and we're going to have to see if there are more dormant tokens that move. And the other big metric to look at, I'll just skip right ahead to it, for dormant token movement would be mean dollar invested age. And I just put out an article yesterday explaining how dormant token movement is, I guess I should say how mean age, especially mean dollar age, can be a significant signifier of, insights.santiment.net. There we go. So this chart here that I'm about to show kind of highlights a few of the biggest drops in mean dollar invested age over the past decade. The yellow line is the mean dollar invested age line, and when it goes down, prices are generally moving up as it's moving down, because there is a lot of stagnant coins and investments that are suddenly moving out and creating much more circulation, address activity rises, things of that nature. That said, where we are now, we do see just a very, very small tapering down here, but it's tough to say whether it will continue. Keep an eye on this. I think it's going to be a key validator for whether the next bull run is going to be kicking off in 2022, or whether we may have to be waiting a bit longer here. But generally speaking, mean dollar invested age is actually measuring the dollar value of all the coins invested right now. And the longer they stay in, of course, that means the average days in these dollar invested is rising. And when it moves down, that means that the average days is becoming newer and younger, because they are moving to a new address, and that address owns it for 0 days when it first obtains those new coins, right? So sitting in an old one, the clock just gets higher and higher, moves to a new address, the clock resets and goes to 0. And that's when you see, average days in like the 70s and 80s after being at like 450, a year before that. So it can really make a huge difference. There is, of course, also mean age, which is just measuring the Bitcoin value instead of the dollar value. And we've seen through some back testing that the dollar value is generally a little more predictive for when there is a drop and having prices rise in correlation. So we tend to focus a little more on that. We also talked about a few specific assets seeing drops in their mean dollar invested age right now. Those would include XRP network that just had a big drop a couple days ago. Litecoin, which had an interesting anomaly, a big jump followed by a big drop. So that's worth keeping an eye on. Dogecoin has had a huge, huge drop in dormant token movement over the past 3 days or so. And it actually went all the way back to May levels just in one fell swoop with this big drop. So that's worth taking a look at to see if there might be something to Dogecoin brewing. True USD, of course, stable coins also matter when it comes to mean dollar invested age. And oftentimes you'll see a lot of dormant token movement in a stable coin. And that means that there's some capitulation happening where people just want to get all of their funds out of crypto. That certainly would make sense in May, which was a very, very rough month for crypto. And it also can mean that they're moving stable coins to exchanges for the purpose of buying crypto. So it can kind of go both ways, but generally when you see big drop in TUSD or USDC or USDT on the mean dollar invested age end of things, that's a signal that you'll start to see a lot of volatility going on at minimum. So there is a lot of jagged edges here, and I think it's worth keeping an eye on, especially with this recent drop here, as prices have really been rising over the past week. And then finally, staked Ethereum, which is interesting. That's obviously going to be an asset where it's supposed to sit in addresses for a long time for the purpose of staking and loaning out coins to others. But when it moves, that generally can be a good sign for Ethereum. And that, at minimum, we've seen a downtrend without a lot of rising going on. So that is something that also showed up on the Sandsheets model that I'm going to debut to you guys now. So we have a few different charts here, and this is still being worked on. So when you ask, where's the link? How can I download? We'll have an insight coming out for that in the next week or so to show you exactly how it works, how to download it, and how to be able to check in on it on a daily basis so you can catch the same kind of drops that I used to put this article together here. So mean dollar age over the past 90 days here, you can see all the lines blended together, and they're naturally going to be mostly rising because, most days there isn't a big drop and a bunch of major dormant token movement. It tends to happen all at once, and then you see huge drops like this, or obviously like this huge one here for Huobi BTC. But most of these assets are going up, and they're north of where they were 90 days ago. And that's not ideal. Bitcoin, as I said, it was just showing a slight tapering off. I probably won't find the blue line here, but it's one of the many lines that is mostly just staying, continuing to rise among the pack here. The big ones that we've seen drop, obviously Dogecoin, which I mentioned in the article. This one's tough to see, but this is staked Ethereum, which had its big drop here earlier this month. Wobi BTC. This one is Litecoin here, where you can see the drop. And then XRP was somewhere in here as well. An easier way to look at it, though, if you don't like a whole bunch of lines all blending together, is isolating just the dips. So these are showing like the percentage dips on a given day for its overall mean dollar invested age line. So you can see this was the staked Ethereum dip back on July 13th. We had wrapped Bitcoin having a big drop here. You can see some other lines, Binance Coin. They generally happen in clumps, like on big volatile days where there was a big rise, which we of course saw many over the past, well, all month of July. It definitely wouldn't look like this in June, I'll tell you that much. But because things have really started to rise, there's a lot more dormant tokens starting to come out of the woodwork and getting interested in what looks like at least the beginning of a nice rebound for a lot of people. So a few others here to look at. The transfer token had a big drop. Huobi BTC, as I mentioned, that's what that big drop was on the 20th. And of course, Dogecoin just in the most recent day. So this can be a nice way to just filter through the noise. You don't need to look at, 50 plus different lines altogether, and you can just find the ones that are seeing big dips right now. And pretty soon we'll also have the mean age dip, so you can look at it for BTC instead of just dollar age. And it can be a really nice way for us to see when, dormant tokens are specifically starting to circulate for one asset. And yes, we do see price movement after these kinds of dips for these assets. So it can be very valuable. If we look at something like Doge, for example, let's go to just the last 3 months, head up to Dogecoin. So you can see right here, the mean dollar invested age dropped on the 18th. If we hold down shift and drag to the right, price is up a modest 3% so far. So this could be some good alpha here. Price hasn't really reacted much yet. There's no guarantee that prices are going to surge just because of mean dollar invested age, but the probability certainly runs higher. Another good example would be XRP, which I also mentioned in the article. So if I go back to the last year, check out the biggest dips. So this one here on August 31st, if I hold down shift and just go to the base of it, just a couple days later, there was a nice 9% run right here. I can even go a little further because the mean dollar invested age was staying down up until the peak. So it went up about 17% just in that week where there was that big drop there. Even on a shorter one right here, we can see there was a lot of dormant token movement starting on the 28th through the 30th. And just in those two days, price of XRP went up 14%. This big drop here, hold down shift, just go to the base of it 5 days later, price went up 18%, right? There's not a whole lot of points where the mean dollar invested age is dropping and the price is dropping too. Usually you'll see a nice rebound when this happens because it means there's a lot of older stagnant coins finally starting to be moved around a bit. So there is some good alpha and anecdotal evidence showing that mean dollar invested age drops, even on just a short-term time period, can be very favorable if you catch them early. All right, so that's a little intro. I'll have a more complete analysis and explanation of how that Sandsheets model works within the next week, as I mentioned. So heading back to some Bitcoin metrics to round out a few other key updates. Supply on exchanges has resumed going down. It was moving up a little bit when we updated everyone last week, but it's basically gone straight back to declining, which is good. It means there are less and less assets that are available on exchanges that can be sold off and cause prices to go down further. Moving on to whales here. So this is, of course, one of the key metrics we like to look at, and we usually combine 100 to 1,000 and 1,000 to 10,000 tiers. And we'll look at just the last 6 months, and it shows us a not so great picture. The whales are continuing to dump their supply slowly but surely. Since its peak in the year back on January 28th, they have dropped 2.6% of Bitcoin's supply, which is tens of billions of dollars, I believe. And that is a overall decline of almost 5.5% of all of their Bitcoin. So that's a big drop and something to be concerned about. This is always something that you should have in the back of your mind when you start to get too euphoric or too fearful. Take a look at what the big key stakeholders are doing, because they can often paint a clear picture as to where prices will go next, since they have so much control over the markets. If I go back to the last 3 years or so, we can clearly see signs of when they are accumulating, prices tend to go up. When they drop, prices tend to decline. When they start accumulating again, even if there's a month or so of lag, things will eventually jump back up toward the whale's favor. And you can see clearly their big top over the past 3 years was in October of 2021, where they were holding 49.5%, and they started to dump pretty considerably, even going into the true all-time high a few weeks later. And since that time, if we go all the way back to October, they've dumped 3.27% and dropped 6.6% of their entire stack of Bitcoin collectively. So something to keep in mind, even with some of the other metrics looking decent, we also have to be wary of whales not being big believers in Bitcoin being able to recover right now. Exchange flow balance, fairly neutral. Like I said, it's starting to decline off of exchanges right now, so that's a good thing. Network realized profit loss. We did see one big spike. I guess we had two, actually. We had one on the 19th in the negative territory. So there were some losses that were being collected on the network, but that was followed up by a big profit spike that was the biggest since April. So it's kind of bittersweet here. We don't want to see too many of these positive spikes. Those can often be warnings of big tops, as we saw here back in April, and even here back in 2 weeks after the all-time high in November. But overall, it's not a big one. We'll have to just see if there starts to be some bigger network realized profit loss spikes, which would indicate that people are really starting to take a lot of profit here heading into the later end of the summer. Development activity, nothing too special. It looks just fine for Bitcoin. Volume looks pretty much standard. It's gotten a tiny bit of an uptick over the past week, so that's worth noting. But certainly still has a long way to go to get back to the first half of 2021 levels that we saw. We touched on mean dollar invested age. I'll get to on-chain transaction volume and profit to loss in just a moment. Whale transactions are continuing to decline. We zoom in, if we look at the last year, we do see a slight uptick here. This is probably worth keeping an eye on, because there's been a bit of a climb, and it's a lot bigger than the previous instances of high waves in June. So whales are starting to get a little more involved, but if, as I mentioned, the supply continues to move down overall in terms of what the whales are holding. So it could very well be some profit taking, and we have to be wary of this. All right, and I'll just show off the ratio of on-chain transaction profit versus loss, and then we'll get into a few questions here. So Balresh, if you don't mind getting that pull out if you haven't yet, and having a few assets lined up, that would be great. As far, give me one moment and I'll figure out what that is, and we'll just go right into it. Yeah. So Bitcoin is looking to be slightly in positive range in terms of its ratio between profit and loss. Ethereum, on the other hand, has exploded. There are a ton of profit-taking transactions happening right now on the Ethereum network, not just last week, but to start this week as well. We're seeing very high bars, and generally, these are indications of local tops beginning to form. So be wary of the big spikes that are happening on the Ethereum end, because most generally paint a sign of an upcoming drop of some kind. Now, most of them, as you see, happen with Bitcoin also up there. And considering Bitcoin isn't seeing a lot of a high ratio of profit versus loss, there could still be some room to run before you start to see a big high spike like this, or like this even. So just stay tuned. I really like this metric, and there's a Sandsheets model out there in case you guys want to look at this one further. Okay, that was all, Balresh. Thanks so much for having a suggestion all lined up for me, and you can send it my way now.
Okay, let's start with GRT, the graph.
Mm-hmm. Not one we've looked at in quite a while, but
for AVAX next. Sorry?
Sure. Yeah, I was going to say for GRT, it hasn't been one that's gotten a lot of traction in 2022, but it certainly was a popular one in 2021. And we can look at where things stand now when it comes to comparing how some of these metrics are looking compared to last year when it was getting a ton of hype. So circulation looks like it's been getting a few spikes here and there, but overall it's staying pretty flat compared to how it looked a year ago. Daily active addresses actually up a little bit, so this is good to see. Since May, when there were an average of about 436 active addresses, things have risen to about 687 now. So give or take, around a 50% rise in daily active addresses over these past couple months. That's a very good sign. And it does appear that it's starting to get some attention. If you just look at these orange candles here, compared to how things looked for most of 2022, we're in the best spot we've seen for GRT. So very good sign there. Average sign on the circulation end. Move on to 30-day MVRV. It looks like it's sitting here at 5.5% right now. So just slightly overbought at the moment, with some people starting to generate some profit. You can see it really dropped low to negative 55% back in mid-May when there was that crypto-wide drop-off. And that would have been, interestingly, even though that showed that it would have been a good time to buy, there was a very, very short solace, and then prices have continued to go down since. So GRT is a candidate for one that's really, really below where a lot of other assets are. It's definitely lagged behind. And that might be why this person in our stream has requested it. But you can see at its top, when it was at about $1, its MVRV got up to plus 45%, and it got as low as negative 55%. But generally, anything between plus 15 and negative 15% is pretty much within range of normal. And it's just slightly above average risk right now because the 30-day MVRV has risen just slightly with the very mild rise that's happened here in July. On the other hand, the 365-day MVRV, we go back to the last, I don't even know if it's been out for 3 years. It has. Okay, no, it hasn't. It started in December 2020. Um, the 365-day MVRV is pretty much at its lowest point in GRT's history. These were, of course, the early days, so take them with a grain of salt. But once things started to stabilize, we saw a peak of around 98% for the 1 year, and as low as pretty much where it's at now, negative 72 to 75%. So that's a good sign. It shows that the long-term traders are heavily underwater, and eventually there should be some event that pushes this 365-day MVRV back to 0%. And that would be at the point where you're no longer in better risk than usual for this asset. So as of now, 30-day MVRV on the short to midterm time scale, it's looking pretty neutral, but the long-term time scale, it's looking pretty bullish for MVRV. Age consumed, nothing too out of the ordinary for spikes. Supply and exchanges has been climbing quite a bit, so that's not a great sign to see. It doesn't have a ton of its percentage of supply on exchanges at about 9.3%, but it has continued to rise ever since about a year ago, to the day or so. Right when it bottomed out, the supply in exchanges has been rising ever since. And even though the price had a temporary rebound, right around the time Bitcoin hit its all-time high and started declining, GRT started to decline right along with it as the supply in exchanges just continues to rise. It's probably in danger of hitting 10% or more. This is not ideal. We'd rather see supply in exchanges staying flat or declining. And that's certainly not what's happening right now. Let's take a look at whales and see what's going on here. So the current price of GRT is right around 11 cents. That would mean that we'd probably want to take a look at the 100K and 1 million to 10 million tiers. So the blue line is naturally going to be going down because it's such a new asset that it's still distributing to smaller addresses. We'll take a look at the 10K one as well. So it's pretty interesting. It might be too hard to tell because it's so new, and every single address tier below the very top is going to continue rising until it starts to get. We usually see the distribution range start to end around 90%, and it's getting very close. It's at 91, and that's when you start seeing like these tiers begin to seriously fluctuate and go down when the price is going to go down and go up when the price is going to go up. I'd say the yellow line has a little bit of validity though, based on the accumulation they did during these dips back a year ago and then dumps as it rose. But ever since then, I'd say this is a pretty good sign because they've just continued to accumulate as the price has dropped more and more. They're up to about 5.7% after being as low in the very early days at 1.6%. So yeah, I'd say this is a solid sign. They don't own a ton of the supply this tier, but it's enough where I'd be a little optimistic that the whales aren't going anywhere. They're not trying to dump their assets onto the really small addresses right now, and they're all going to be rising together because, like I said, the very top tier exchange addresses are going to be distributing for a while, but eventually you'll start to see some patterns where the yellow line, in this case, the 1 million to 10 million, will be dumping to these tiers a lot more. So for now, like if you start to see the tiers, the really small tiers, flatten out a bit or even go down, that would be a good sign that the price is going to rise in the short term, like right here. But it's going to be tough to tell for the short term, at least through the end of the year, exactly how whales are impacting prices until we get down to the very top tier being below 90%. And while we're at it, we can look at whale transactions, which should still have some pretty good validity to it. It doesn't look like there's a lot going on here. the most whale transactions very clearly painted a signal in March of 2022 on the nice GRT rise. And this clump of whale transactions were clearly some profit takes happening. And yes, eventually there was an even further rise without a lot of whale transactions going on. But you want to look for the big clumps here, or probably some accumulation clumping that was happening about a month ago here. So that would have been a good sign that a bottom was getting close. As for a few other things for GRT, nothing really too special for network realized profit loss, mostly negative spikes, which is good. So people realizing losses and getting out of the asset without taking profit. Exchange flow balance, like I said, lots of inflow. So that's not great to see. It continues to move onto exchanges at a pretty unprecedented pace, to be honest. Development activity, it looks like there's a little bit, about 10 to 11 submissions a day right now, which is certainly indicative of a team that is genuinely trying to innovate and advance their asset. So it doesn't look like it's in any sort of trouble of being a rug pull type of asset for the people who don't know much about GRT. Social dominance, interestingly, has been rising quite a bit. I'm not quite sure why. It could be some advancement to the asset that's coming out soon. But it certainly isn't a huge price-related spike like we saw here. So like the crowd reacted to a big price surge that was going on in mid-March, and that signaled that there would be a local top coming up, which is what happened. Mean dollar invested age continuing to climb. Ratio of on-chain transaction volume and profit to loss is showing that there's definitely been some profit taking the past week or so, which is interesting because the price really hasn't risen too much, but it still hasn't stopped the ratio of transactions to heavily favor the profit end of things. So that's something worth keeping an eye on. We'd ideally want to see mostly just bars below this 1.0 line right here. All right, so that's GRT. I think we did some good coverage on that. Thank you for the person who requested that asset. You mentioned another asset that was not ERC20, Balresh?
Yeah, that was Avalanche, AVAX. And then we just had a suggestion for XRP, as it seems like there's a lot of volume during the last couple of days.
Yeah, we put out a big update about a week ago about XRP having a huge volume anomaly. So we'll take a look at that next. But we'll take a look at the social end of things for AVAX. Obviously, it's not an ERC20. So for those who don't know, our data is much more limited for non-Ethereum based assets. And we are mostly resigned to looking at development activity, social volume, and weighted sentiment. So development activity for AVAX looks fine, probably a little better than GRT actually, about 17 to 18 submissions per day right now. Doesn't appear to have any sort of rug pull caution flags going on here. Social volume and dominance is mostly declining right now. It doesn't look like it's being discussed much at all, which is fine as long as we're not seeing a huge spike on a rise like we saw right here. We should be fine for AVAX, so this isn't really telling us much. And then weighted sentiment, which I need to add back to this template, by the way. Looks like it's mostly negative, and this is a result of it just not being talked about a lot. The last time we really had a big positive spike and a lot of euphoria was right here after AVAX dropped off considerably and went down to the $15 range. And ever since then, it's just kind of been ignored. It looks like we really just want to avoid the euphoric spikes, just like we showed on the dominance end. There was a big euphoric spike toward AVAX back in March that signaled at least a short-term local top until things went negative again, and then prices rose. So right now, not much to say about AVAX other than it's not being discussed much. We do have funding rate data on that. So let me see if I can find it. I'll just add it to this first chart. So we'll add, actually not that one. We'll add just this one and this one to Binance. So if we put them in the same axis really quick, we'll just do 0.01 and negative 0.01. Nope, that's way too much. We'll go a little further. There we go. All right, so now we have them on the exact same axis, and we can take a look at how both DYDX and FTX are looking for the funding rates at the moment. And it appears that they're both in very slight negative territory, but just about even. So it doesn't look like there's major shorting going on. This would have been the time to really get into AVAX, because look at all of these major shorts going on. People trying to ride the downward slope here for the price, and they got burned as prices flattened out and eventually rose. Then all of a sudden, look, people started longing it, saying, okay, well then I guess I'm going to ride the wave up and bet that the price continues to go up. And then it did not, and it went back down. So people have gotten very faked out. Even here, another big short spike, and then things immediately flattened out and then rose again. So you can see clearly funding rate generally moves the opposite direction of expectation for most assets. And DYDX especially shows a very clear sign of that. All right, so that's AVAX. Thank you for the person who suggested that. And we'll round it off with XRP, which only has FTX funding rate on the hourly scale. It should also have Binance, so I'll add that. Okay. So it doesn't look like much is going on the Binance end. Let's look at just FTX here. It looks to be just about even, so nothing special for the funding rate for XRP right now. If we look at daily active addresses, though, check out these huge spikes that we've started to see just in the past week. Several major moves happening with some big addresses and a lot of addresses all at once. And of course, we can look at circulation as well. Bring that back. Take off daily active addresses. Yeah, so there was a big circulation spike here. Generally, I've seen that a lot of these circulation spikes for altcoins and XRP, they correlate with local tops. And this one here was no exception. It did drop right after the circulation spike. But overall, if we add a 30-day indicator, things are looking up for the last 6 months. If we go to like more long-term, the last 3 years, yeah, it's definitely risen pretty considerably throughout 2022, and the average is creeping up toward where it was right at the turn of the year. Its high was over 1 billion XRP moving per day back in January of 2021. So there's still a long way to go for that. They're a little over halfway there. MVRV, let's add the 30-day back. And we'll zoom into the last 3 months. So the 30-day MVRV is sitting at about plus 7%, which is halfway to the danger zone. There is a higher risk than average because we are over 0%, but it is within range where there can still be plenty of climbing historically without too much resistance. The 365-day MVRV is looking far better, though. Let's take a look at that over the last 3 years. No idea why this line is just stuck here. But regardless, the 365-day MVRV is pretty much at its lowest point. I guess technically 1 month ago, but still, it's generally at its lowest point over the past 3 years. So this is a very good sign that it is underbought on the long-term time scale, and many people are well underwater on XRP at the moment. So this is a very, very solid sign for the long-term prospects of XRP. Age consumed, we did see a big dormant movement just about 3 days ago, it looks like, on the 19th. And this was the biggest spike of the year. So that's certainly something to notice. And it's likely why we saw that mean dollar invested age line moving down too. So there is some big money moving, as Balresh alluded to when he suggested this asset. And it's hard to say whether it's happening on a drop or a rise. I guess technically a rise. So that could be a short-term worry because it occurred as prices were moving up about 15, 16% when it occurred. So it could be a little bit of profit taking from a dormant address that hadn't moved in quite some time. I'm just curious. Let me see. With so much big movement lately on the XRP end, let me see if we can get some top transactions to show up. We don't have it. Sad. I was hoping we could show that. But regardless, there's likely some big addresses that are doing some major interactions and likely hadn't moved in quite some time based on the fact that the token age consumed chart there saw that huge spike. But let's look at some other metrics in the meantime. Take these off, unmerge that. So XRP is known as a more centralized asset than most. It has a large amount held by its top addresses, but there is still some validity to look at the tiers right below it. So we're looking at just the percent held, and we can see that the red line, which is the mostly exchange addresses and founders addresses, they're continuing to distribute to the larger addresses here. I'd say the yellow line has some validity for some alpha, and looking at it in isolation over the past year, it looks like it was at its peak right at the turn of the year around Christmas time, and then started dumping pretty heavily with a little bit of accumulation in between, another drop. And then right here in mid-May is where they really started to accumulate and haven't looked back. They've gotten back to basically the highs of the year in mid-January. And I'd call this a pretty good sign. It's not a major accumulation. They were holding 5.95% here in May. And now they're up to 6.3%. But as long as this line is moving up, I'd feel confident that the price can rise. Network realized profit loss. Take a look at this huge drop. So this is related to that token age consumed spike. And it appears that when those tokens were moved, they did so at a major loss. So that created some realized loss because the dormant address may have been in way back in 2021, or even back when it was really thriving in 2017 and 18. If it had the coins sitting in that address way back then, it could have been related to the move now, where it was at a fraction compared to the $2 plus mark that it was back then. That would definitely register as a big realized loss. I wish we had address analysis for XRP. I think it's something we could definitely work on with our developers to have in the future, because it could be very interesting to look at big capitulation spikes like this and see where they're coming from and how that address's actions have historically impacted prices in the past. Development activity, it's looking a little low, to be honest, for XRP. Only about, looks like anywhere between 3 to 6 development activity submissions per day right now on its GitHub, which is a bit concerning for such a large top 10 market cap asset like XRP is. So that's something to keep an eye on, especially because back in September of 2021, we were seeing major developments, anywhere between 50 to 70 GitHub submissions per day. So yeah, a little worrisome there. If anyone is more savvy than me on XRP, I'd love to know if they know something about the dev team. Weighted sentiment, we did see a big positive spike here on the 19th. This went along with the token age consumed and network realized profit loss spikes. So there was a big positive spike there, and it did coincide with a local top. But look out for the really major ones like this. These are the ones that coincide with corrections. This one was perfectly timed, a huge positive euphoric sentiment spike here in September, followed by a massive drop. But it's mostly back to neutral now. So not really much to say either way on weighted sentiment. Mean dollar invested age, we did go over the fact that there was that big drop that coincided with the token age consumed spike. And ratio of profit loss does look like it's favoring profit taking, which makes sense because the price has been rising over the past week. Whale transactions as well are staying pretty dormant without many notable anomalies. So yeah, I think that concludes it. Thank you for the 3 suggestions. Anyone else who wants further asset analysis, tag me or Maxim or some other team member in our Discord, and we'll be happy to check out a few charts with you there. Don't forget to share your Santiment charts with your community. They are massive helps when you do that, especially if you use your referral link so we can share some of the revenue. If they sign up and become a Sandbase Pro member, you get 25 to 35% of that cut, which is pretty nice. So all of that said, drop a few comments in the YouTube stream here. It's always very helpful for us, not just in the chat, but actually leaving a permanent comment that we can read later. We'd love to read all of those and get your feedback. And other than that, guys, stay safe, stay cool if it's super hot like it is here in California where I am, and enjoy your weekends. We'll be talking to you very soon. On behalf of Balaresh and Maxim, cheers.